Many Americans do their investing exclusively through mutual funds in their 401k retirement plans, and some of them are increasingly worried 401ks won't deliver enough money to carry them through retirement. So some people are paying advisors who recommend frequently moving money in and out of funds within a 401k, like a trader buys and sells stocks. As Stacy Tisdale reports, this controversial idea is getting a thumbs up from some investors, but a thumbs down from some of the big financial companies that invest 401k money.
Sandy Lieb Geiger, a 47-year-old manager at consulting firm Accenture, figures she's going to need about $4 million to have a financially secure retirement.
Top of my list, China, Australia, New Zealand, Africa, Antarctica. And I want to be able to go to them freely and not worrying about pinching pennies.
Sandy, a single mother who does not believe Social Security will be around when she retires, has been saving money in Accenture's 401k for nearly 20 years. Even though she paid close attention to the markets and actively managed the fund, she realized at the rate her money was growing, she couldn't possibly have enough for her golden years.
I'm not going to save $4 million out of what I don't spend on food and shelter. It's not going to happen. It has to grow.
In search of more growth, Sandy found a service by Compass Investors called Horizon. It gives clients customized monthly trading advice for their retirement plans. She's been following the Compass strategy since 2008. It starts by looking at people like Sandy on an individual basis. Clients must figure out what their ideal retirement looks like and how much it costs. The strategy: get to that magic number as quickly as possible versus traditional long-term investment strategies. To get you there, Compass looks at investment choices available in your 401k and gives you trades to execute every 5 weeks. Compass also tells investors to bypass funds that would charge fees if you don't hold them for more than 5 weeks. According to the Compass algorithm, which is based on a fund's performance for the past 2 years, stock funds currently have the highest ratings, and that's what it's recommending to its clients. A very risky portfolio compared to what financial planners call a balanced strategy: 60% in stocks, 30% in bonds, 10% in cash. When investors reach their retirement target, Compass parks the funds in a safe investment.
I want to be able to provide income forever, if possible, and you can do that by growing your accounts large enough and then putting them into guaranteed vehicles that will pay you essentially in interest everything that you would have been getting from your salary.
Compass, which charges $600 a year, is not the only player in this space. Active 401k will give you monthly trading suggestions for about $120 a year. Easy Tracker suggests monthly trades for about $85 a year. 401k Maximizer does the same for about $100 a year. Unlike Compass, the lower-cost companies offer general trading portfolios, and it's up to you to pick a strategy that works within your options. Critics point out that these companies and their trading advice is not regulated, and they are not held accountable for what they say and do. Financial advisors like Jonathan Satofsky question this controversial trading practice, warning that moving in and out of investments that are designed to provide value over the long term can make time your enemy, not your friend.
You're not giving me time to let my thesis play out to see that I was right, because you're forcing me to sell the position.
The retirement planning industry is fighting hard to defend that position. T. Rowe Price banned about 1,300 American Airlines employees from trading its funds, many of whom subscribe to Easy Tracker's newsletter. Vanguard has asked 401k Maximizer to stop writing about some of its funds after it discovered a group of pilots from Southwest Airlines were using the trading recommendations.
If I make a purchase and I buy something today, and I think, okay, this company has tremendous potential over the next 3 years, yet I have to worry about investors selling it in a month, how can I make any investments?
But Sandy's more concerned about investments that meet her specific needs.
This fund manager's job is to create funds that are going to be useful for somebody who's 22 and just joining the firm, or somebody who's 65 and about to retire. They're not looking at Sandy.
A woman who has a clear vision of what she wants her life to look like in retirement and how much money she'll need to get there. Stacy Tisdale, Al Jazeera, New York.